So, in the previous class we discussed about the theoretical foundations of the regulation, and here we have seen that we have two regulatory systems. One is multiple regulatory system, then we have a single regulatory system. Then every regulatory system has its own advantages and disadvantages. But in general sense, if you observe, in India we have a multiple regulatory system, and there are multiple regulatory bodies which exist to regulate the different type of institutions and the markets. So, the oldest regulatory bodies out of the all those regulatory bodies, the oldest regulatory body is the Reserve Bank of India, and which regulates the commercial banks. And the commercial banks is the most important financial organization or financial institutions in the Indian system as well as the other systems. That is why let us start the discussion on how the commercial banks are regulated and what exactly the Reserve Bank of India does to regulate this commercial bank, and what is the basic role of the Reserve Bank of India, what is the structure of the Reserve Bank of India, how it basically functions. So, this is the basic objective of today's discussion. So, let us start with that what do we mean by or what is Reserve Bank of India and when it was established and what is the structure of that organization, then you can move into the functional part. You see that whenever we talk about the Reserve Bank of India or the structure of the Reserve Bank of India, already I told you the Reserve Bank of India is the central bank of this country or India, and is the center of the Indian financial and monetary system. All kind of financial and monetary mechanism basically works with this Reserve Bank of India or starts with this. This is the apex body who takes care of all monetary and financial aspects of that of this particular country. This functioning of the Reserve Bank of India started from April 1st, 1935 on the terms of the Reserve Bank of India Act 1934. That is why it is the oldest regulatory bodies. It is one of the oldest regulatory bodies which is working in the Indian financial system. And whenever you talk about this structure, all of you very much aware about this, that the governor and the head of the organization is the governor, and the governor and there are 4 deputy governors which are exist or which always work on behalf of the Reserve Bank, and they are all appointed by the central government. And how the bank is managed? The bank's structure is like that. The bank is managed by a central board of directors and 4 local boards of directors and a committee of the central board of directors. So, this is the way there is a central board of directors who basically looks after the different policy issues, and inside whenever we go to this system, what we have seen that this hierarchy is like this. We have a governor, we have 4 deputy governors, and each department is basically headed by the executive directors, then the other bodies who basically work in that particular system. But if you see the Reserve Bank of India, the final control of the bank basically always based upon the central board, which comprises the governor, 4 deputy governors and 15 directors nominated by the central government. So, there are 15 directors who are not a part of this particular bank, they are the specialized people or the expert people from the different areas, and deputy governor and governor obviously a part of the central board, and that is the way this Reserve Bank of India basically functions. And inside hierarchy, if you go that after governor, deputy governor, we have the executive directors, then directors and other people, and we will they always work for the functioning of the Reserve Bank of India. At present, it is always subject to change, but presently we have the Reserve Bank of India has 26 departments and 28 regional offices, which work to regulate the financial system or monetary system as a whole, we can say, because the bank is the most important organization which always we observe, we see in the financial system. So, this is the way the structure of the Reserve Bank of India basically looks like. So, if you see that what is the objective of RBI? If you see the objective of RBI, whenever RBI was established long back in 1935, so what was the basic objective and now what is the objective, whether there is a change, And if you see overally here, what actually I have summarized that over the period of time, that what is the broad objective the Reserve Bank of, what are those broad objectives the Reserve Bank of India has, and how the Reserve Bank of India is working in this particular system, and what basically they are trying to do. The first and foremost thing is basically what the Reserve Bank of India does, that is basically to maintain the monetary stability. So, whenever you talk about monetary stability, you see that whenever you talk about monetary stability, how it comes. If you remember, in economics we have the monetary policy and we have the fiscal policy, and whenever we talk about the Reserve Bank of India takes care of the monetary policy, and the government basically takes care of the fiscal policy. The finance ministry mostly is responsible for the conduct of the fiscal policy. So, as the responsible authority for the smooth conduct of the monetary policy, the Reserve Bank of India always ensures that the monetary stability of the economy can be maintained. Whenever you talk about the monetary stability means we are talking about the price stability. So, the basic objective of the Reserve Bank of India is to make this price level stable in that particular country in a particular period of time. So, this is the first objective on the basis of that Reserve Bank of India was established. Second one, to maintain the financial stability, ensure sound financial institutions so that monetary stability can be safely persuaded and economic units can conduct their business with confidence. It is a very broad objective. You see, what do you mean by financial stability is a buzzword. Particularly after the crisis, people are much more concerned about the financial stability. But already what again and again I am telling you that whenever you talk about the financial stability means in Indian context, that is basically stability of the banks mostly. If the banks are stable, capital base of the bank is basically adequate enough to absorb all type of risk what we are facing in the bank, then automatically what we can conclude that the financial sector in the Indian context is stable. So, what RBI basically tries to ensure, the financial sector in India should be stable, at least the banking sector should be stable, the credit risk, the instability of the banks and the failure of the banks should be minimized. And if that particular, because bank is the payment gateway system of this particular system, so here what is happening, the bank are stable, automatic what will happen, that the monetary stability can be maintained and people have the confidence on the market. And all of you know that the behavioral aspect is quite important for the functioning of the market. If the consumer confidence and the people confidence on the market will be more, then automatically what will happen, that the functioning of the market will be smoother and the operations and all those activities which is happening in the system, that will basically work in a better way. So, therefore, we have to ensure that the financial stability should be there. Financial stability means the stability of the banks, particularly the most important organization in the economic system. Then once this is stable, then the monetary stability can be maintained, consumer confidence and people confidence will be higher, then the market will be working in a better way. To ensure or to maintain the stable payments so that the financial transactions can be safely and efficiently executed. Whether the commercial banks, because already we know that the commercial banks has the only payment gateway or the most important payment gateway in this particular system, the RBI ensures that the payment system should be stable. There should not be any kind of hassles in terms of the transactions. If the transactions are hassle free, then people confidence on the market will be more. If the people confidence on the market will be more, automatically what will happen, that the safely and efficiently all kind of transaction can be executed and participation in the market also will increase. And more the participation obviously will tend to the efficiency in the market, because market will be more competitive And if the market will be more competitive, in that sense whatever price and whatever economic output what we are determining, that will be actual equilibrium output what we can get. So, therefore, the stability of the payment system is one of the major objectives of the Reserve Bank of India. And another most important thing, to promote the development of the financial infrastructure and to ensure or to enable them to operate efficiently. So, here what we can say that what do you mean by the financial infrastructure? Financial infrastructure means establishment of new banks, establishment of the new branches of the commercial bank, establishment of the different organizations which can help the trading and as well as help in efficiency, increase in the efficiency of the market, like the example of CCIL, Clearing Corporation of India Limited, which was established by RBI for the trading of the government debts and as well as to some extent the also the foreign exchange and the derivatives instrument, to some extent not derivatives, mostly it is related to the government debt. So, that is why the RBI's basic job is mostly deal with also establishment of the new infrastructure which can help for the functioning of the market in a better way. Another one is to ensure that credit allocation by the financial system broadly reflect the national economic priorities and the social concerns. You see, whenever the commercial banks give loan, to whom they are giving loans? They are giving loans from where they can maximize their benefits. They give the loans, they try to find out the customers to whom they can get more returns, but that may not also fulfill the social objectives. There are some small units like small farmers, small business units. So, they may not be able to pay that much kind of money or that much kind of interest rate what the bigger commercial units are able to pay. So, then if there is no regulation, there is no such kind of norms which are there where this the lending also, the credits also should be given to this kind of entities, then those entities can be marginalized and those entities cannot grow in this particular system. Because the Indian economy is mostly based upon the rural economy and most of the people live in the rural areas, and also long before our maximum percentage of the share of GDP is coming from the agricultural sector. So, keeping that thing in the mind, the commercial banks should provide the loans to this kind of sectors. The Reserve Bank of India also make the policies which is basically related to the societal concerns. So, at a time all kind of sectors should grow simultaneously. That is the basic objective of the basic notion of the basic we can say that motto of this Reserve Bank of India. And to regulate the overall volume of money and credit in the economy with a view to ensure a reasonable degree of price stability, that already I have explained you, because monetary stability leads to price stability. So, that is what basically this is the major broad objectives on that this basis the Reserve Bank of India was established. So, now we will see that how this Reserve Bank of India basically functions. What are those basic functions of RBI? There are many functions RBI does. So, I will highlight some of the major functions what RBI basically follows. All of you know that obviously RBI is the note issuing authority. Whether RBI issues the note or not, every common man and everybody knows able to know that after this demonetization and all these things, because everybody was voting that, everybody was reading in the newspaper that RBI is not able, RBI is trying to change this note, they are going for the new 500 notes and all these things or 100 rupees notes. So, if you see that obviously the basic function of RBI, the first and foremost important function of RBI is note issuing authority, except the 1 rupee coin. The 1 rupee note or the coin is not basically made by RBI, this is issued by this finance ministry. Apart from this 1 rupee note, the other type of notes like 10 rupees, 5 rupees, 20 rupees to 2000 rupees, these are the denominations which are existing in the system now, 5, 10, 20, 50, 100, 500 and 2000. So, only RBI has the authority to issue the notes. other than 1 rupee notes and coins. That is what already I have mentioned you. So, the prime function of the RBI is the note, it is the note issuing authority, number 1. Number 2, it is also called as the government banker, because RBI is the banker to the central and state governments. It provides all kind of banking services to the government, such as acceptance of deposits, withdrawal of funds by checks, making payments as well as receipts, and collection of payments on behalf of the government, transfer of the funds, and management of the public debt. So, all kind of banking operations, what always we do with the commercial banks, the same kind of banking operations the Reserve Bank of India does with the central government and as well as the state governments. So, anytime the central government needs money, they can borrow from RBI. Anytime central government has some reserve money, they can keep it with RBI. Any kind of foreign exchange transactions and everything, anything what the central government tries to do or any state government tries to do. So, every kind of banking operations is done by the Reserve Bank of India only. So, the Reserve Bank of India, that is why popularly called as the government's bank or it is the government's banker. So, in that context what we say that without the Reserve Bank, the financial transactions of the central government may not be possible, because in a holistic way the country's bank is or the central government's bank is basically the Reserve Bank of India. At the time of requirement they provide the money, and at the time of surplus they deposit the money, and they also act the agent on behalf of the central government whenever the foreign transactions are basically made. So, this is the way, that is why they are called as the government banker. Then the another function of RBI, already told you, they manage the public debt. They play a very active role for management of the public debt. How they manage? The Reserve Bank of India basically manages the public debt and issues the new loans on behalf of the central and state governments. It involves issue and retirement of rupee loans, interest payment on loans, and operational matters about debt certificates and their registration. What does it mean? It means that whenever any kind of loans are taken by the central government or the state government, mostly central government, all the loans are basically taken through the Reserve Bank of India, number 1. And whenever they want to raise money from the public, they sell the securities through Reserve Bank of India. On behalf of the government securities are sold by Reserve Bank of India. Whenever they try to extract or try to absorb the money from the market, what they do? They sell the bonds and get back the money. And whenever they try to inject the money into the system, what they do? They basically buy the bonds from the public and give them the money. So, either buying and selling of the bonds either increase the money supply, decrease the money supply, management of the debt from the different agencies, all these things of the government are done through the Reserve Bank of India. So, they play a very active role for management of the public debt, which is done by, or basic job is done by the RBI. So, the RBI plays a very vital role for smooth functioning of the public debt system, public debt management system in the country. Then obviously, this is also called as the banker's bank. Like RBI, if any like central government, any commercial bank, whenever they need money, from where they get the money? They get it from RBI only. So, if you see, the bank basically controls the volume of reserves of commercial banks and thereby determines the deposit and credit creating ability of the banks. You might have heard, whenever there is a change in the policy by the Reserve Bank of India, it affects the functioning of the commercial bank. Why? Because Through that, commercial bank tries to, we will discuss more about this whenever we talk about the instruments or the policy instrument what RBI uses to control the money supply and to make the price stable. So, that will come later, but here what we are trying to say, RBI controls the banks, other commercial banks like State Bank of India, your Punjab National Bank, your syndicate, all kind of banks which are there, through different ways, through different mechanisms, through different instruments. Therefore, what RBI basically has allowed, RBI has basically done, the Reserve Bank of India opens the current account with banks with itself and enabling these banks to maintain cash reserves as well as to carry out interbank transactions through these accounts. Every commercial bank can transact with another banks. They should maintain a certain kind of cash reserves with Reserve Bank of India, that is why in our term we call it CRR. The basic objective of CRR is to decrease the probability of default or the liquidation of the banks in the future, although that does not carry an interest, that we will discuss more afterwards. Here if you see what the Reserve Bank of India basically, every commercial bank has an account with the Reserve Bank of India. So, whenever they need money, they can borrow also from Reserve Bank of India through different ways, through liquidity adjustment facility, through repo operations, etc., etc. And whenever they have any surplus money, they can also park their money with the RBI. And the interbank transactions can be settled by the transfer of money through electronic fund transfer system, which is basically real time gross settlement system, which is operated through RBI. So, every commercial bank has an account with the RBI and all the transactions which they make either through interbanking system or this excess reserve whatever they have or any kind of excess money what they want to borrow from RBI, everything is done basically from the RBI itself. So, therefore, whenever the commercial banks are in scarcity of the money or whenever they have the surplus of the money, they depend upon the RBI, and because of that they are called the bankers' bank. So, RBI is the bank of all those bankers. That is basically another function of Reserve Bank of India. So, that is why they are the most important organization in the financial system, particularly in Indian context. Already I told you, as a regulator, they are the supervising authority. So, what kind of supervisory role the Reserve Bank of India plays, what kind of functions they do, what kind of jobs they do to supervise this banking system. First of all, it issues the license for the establishment of new banks. You might have known those 2-3 years back, we have so many banks got the license, private banks. So, only Reserve Bank of India has the authority to issue the licenses by going through a thorough process. They have to see whether these particular entities are able to do the banking operations or banking business or not. So, keeping those things in the mind, what they do? They can issue the licenses for the establishment of the new banks. Even any bank, whenever they want to set up a new branch, for that also Reserve Bank of India provide the licenses, and the licenses have been given after this thorough mechanism, or they are going through the actual process whether the banks are fulfilling those criteria or not, and this is RBI ensures that this particular bank is able to fulfill those requirements, then only the license can be issued to them. It prescribes the minimum requirement regarding the paid up capital and reserves, transfer to the fund, maintenance of cash reserves and other liquid assets. You see how much loan one individual can take, that regulation RBI makes. How much industrial loan can be directly given by commercial bank, and if more than that, then this how much money should be above, how much money the RBI should interfere or the commercial banks should take the permission from RBI. This is basically done to smooth control of the operation or to make this financial system more stable. It also inspects the working of banks in India as well as abroad in respect of their organizational setup, branch expansion, mobilization of deposits, where the money is invested, what is the credit portfolio management they are doing, how much loan they are giving, how much is the non-PAs, how much money can be recovered, what kind of credit appraisal policy the banks are following, how the banks are, what is the performance of the banks, what kind of credit planning the banks are doing, what kind of manpower planning or training the banks are doing, all kind of nitty-gritty issues which is responsible or which is important for the commercial banks, those are all basically supervised by the RBI. It conducts the investigation from time to time into complaints, irregularities and frauds in respect of the banks. All kind of frauds basically, if any kind of irregularities which can happen. So, for all these things basically investigation is done by RBI first. So, it also controls the appointment, reappointment of termination of the chairman and chief executive officers of the private sector banks, because the public sector banks CEOs and chairman are appointed by government, and whenever it is in terms of private sector banks, it is responsible, the RBI's approval is very much required. It is also approves and force the amalgamations, means actually if some of the banks are not functioning well, their performance is not basically good, then RBI can tell them to merge, or RBI can tell these some particular banks to merge together to get rid of this kind of problems and to improve their performance in the future. So, this is what basically what we are talking about the supervising roles. And another major function is the exchange, RBI is the exchange control authority, because all foreign exchange transactions in India are done through Reserve Bank of India only. It administers the foreign exchange control, chooses the exchange rate system, mostly India follows a managed exchange rate system. If there is any kind of instability in the exchange rate fluctuations, then RBI can intervene into that to control that. It also manages the exchange reserves, foreign exchange reserves whatever we have. It also it has also the responsibility to interact with all those foreign bodies like IMF, World Bank, Asian Development Bank, etc., for any kind of suggestions or any kind of functional relationship at the time of requirement. So, RBI has the authority to do that. It is also responsible for formulating the prudential norms. RBI formulates various norms to create and maintain a stable, efficient and well functioning financial system in India. So, all those kind of market disciplines, all kind of regulations with respect to commercial banks are created by RBI. I can give you an example. For example, in terms of the market discipline, the commercial banks are always directed by RBI to disclose their balance sheet in a periodical basis. If they do not disclose that balance sheet, then the adequate amount of fine or penalty can be imposed upon them. So, like that, what are those disclosure, what are the things they should disclose, and which are the things is beneficial for shareholders and all kinds of other stakeholders of that particular bank. Everything, for everything, the rules and regulations or norms are basically maintained by RBI, and RBI also ensures that they should follow this, the CRR should be maintained, and as well as they should maintain this capital adequacy ratio norms which is given by the Basel. So, all kind of things, norms basically always monitored and regulated by RBI. And already I told you, these are the promoter of the financial system. They help in mobilizing the savings. They also render the developmental and promotional services, and establishes also already I told you, they gives this guidelines to provide this loans to the different priority sectors, and also RBI can establish the different specific organizations to develop the particular sector, like NABARD. NABARD was established in 1964 by the Reserve Bank of India to promote the agricultural sector. Because the agricultural sector was not that developed, so specific organization has been established to develop that particular sector. So, like that, there are different kind of organization can be also set up by RBI to promote this particular entities which are not developed in that particular system. Already I told you, it regulated the supervise the payment system. It created a board of regulation and supervision of payment and settlement system as a committee of the central board. A new department called Department of Payment and Settlement System was constituted to assist this particular committee in performing these functions. and obviously it conducts the monetary policy, which is the most important or vital thing what the central bank does. Because from the beginning we said that the monetary stability is the prime objective, or the financial stability is the prime objective of Reserve Bank of India. So, that is why how the Reserve Bank of India conducts the monetary policy, how they will ensure that price can be stable, how they can ensure that the banks should run in a efficient manner. So, this is the way basically, that is why the RBI basically is the regulator of both money and credit. So, the most important job RBI, if you see overall, it three things they do. They create the rules for the banks, they monitor the exchange rate and control they are the exchange rate controlling authority, and as well as the all kind of transaction, foreign exchange transactions basically done through them. And the most vital thing is they are the government bank and also bankers bank, and the most important thing is they are the implementer of monetary policy in the system, and they conduct the monetary policy in such a way by that monetary stability and financial stability can be enforced. So, in the forthcoming classes we will be discussing about the instrument of monetary policy and how the RBI basically conducts the monetary policy to make this price level stable and to increase the output of the economy. Please go through this particular references for this particular session. Thank you.